Good morning, everyone. Today we are talking umbrella and excess liability with our friends from IMA, which is formerly Parker Smith and Feek. We have Cassie Stenberg and Lynsee Weigand here, along with Riley Flock from the association. I'll introduce him in a minute. Just a little bit of housekeeping before we get started. We are recording this video and we will post it to our website later on today. And if you registered for this, you will receive a copy of it in your email sometime this afternoon also. We also have the Q&A open. It's down at the bottom of your screen. So if you have a question, go ahead and type it in there and we will get to those after the presentation. And with that, I'm going to go ahead and hand this over to Riley Flock. Good morning. How are you?
Good morning, everyone. Thank you, Lisa. We're pleased to have IMA joining us today. Like Lisa said, Cassie Stenberg and Lynsee Weigand to discuss umbrella and excess liability. Before we dive into that, just to give you some historical context, the association partnered with IMA back in 2019 to address all business insurance needs of the hospitality industry. We as a team have worked with our partners to place hundreds of our members with competitive business owners policies, as well as ancillary coverages, ensuring their businesses are properly covered and getting the most competitive rate we're seeing in the current market. With that, I'd like to give the floor to Cassie and Lynsee.
Hi, everyone. Thank you for joining us today. We know you're busy. My name is Cassie Stenberg. I'm an account executive and I focus in our hospitality group here at IMA. I've been with IMA, we're going on 7 years now. And I will tip it over to Lynsee to introduce herself.
My name is Lynsee Weigand. I am a vice president in our commercial division at IMA, and I lead our local hospitality practice group. And Cassie and I work hand in hand on commercial insurance for members of the association. So we're going to kick off our webinar today on the umbrella market. And there's 3 points that we want to touch on today that are really important that keep coming up. So within the umbrella market, we are seeing some premium increases. We're going to talk about what's driving those today. Insurance companies are also reducing capacity. So we will talk about what that means for you and why that's happening. And then also we're going to talk about some of the coverage exclusions we're seeing now within umbrella policies. Okay, so first up is nuclear verdicts. So this is definitely one of the issues that's driving some of the unfavorable things happening in the umbrella market. So a nuclear verdict, I believe by definition, is probably a claim that's over $10 million. But the claims we wanted to use today to kind of showcase what's happening in the insurance market and what's happening with how claims are being handled now are some claims that our local insurance companies that we work with have been talking about, ones that have happened in King County or at least the West Coast, to kind of give you some context of what's driving umbrella rates. So one of the claims that I want to talk about today is a slip and fall that happened in King County. So for this one, there was a woman who was walking on a sidewalk in Seattle. And in this scenario, the sidewalk was supposed to be maintained by either the retail establishment or the restaurant. And there was moss on the sidewalk. She slipped and fell. She tore both hamstrings, almost had to have a leg amputated. And the woman was a professional runner. So this claim just recently settled for $5 million. Another claim example that I have is there was a woman who slipped and fell in California in a Burger King parking lot. This happened during COVID. And there was very few people there. There wasn't cameras in the parking lot. There's actually no proof that this woman slipped and fell in the parking lot. She sustained some injuries to her hip and knee that allegedly were going to impact her lifestyle. And she was put in front of a jury, and this claim settled for $527,000. Another one that I want to share today that's an interesting scenario is a liquor liability fatality that happened in King County. So this one has to do with an establishment that was open late and had high liquor sales. There ended up being a shooting at the establishment that resulted in a fatality. The business ended up going out of business. And their policy, their umbrella policy, actually ended up not responding due to the language in it. So their primary policy responded for the first million, and then the landlord was actually on the hook for the other 500,000. So we're gonna get into some of the requirements that are put in place by landlords, leases, different things later, but this was an interesting example of how you want to make sure the umbrella policy is written right and why your landlords are requesting the limits that they are. And then another claim that one of our partnered insurance carriers had recently told me about was an E. coli fatality that is active in California right now. So this was a restaurant group that had a foodborne illness E. coli event, and numerous people were found ill, but one man actually passed away. He was an elderly man, about 84, and they are anticipating the claim to settle for at least $2 to $3 million. So why we wanted to talk about the claims examples and the nuclear verdict trend is this is one of the things that are driving the premium increases from the umbrella. Umbrellas used to not really actually ever get pierced. Claims didn't make it that high. And now when we talk to our insurance carriers, it's not just, okay, if we have a claim that goes up to the umbrella limits, it's we have multiple claims this year that are going to go through the umbrella limits. And this is really new for over the past 3, 4, 5 years. So I'm going to kick it to Cassie now to kind of talk about not only are we having these large claims, but how did we get here?
Thanks, Lynsee. These two topics, we could likely have an entire webinar just talking about them. But I'm going to go over just the gist of them and how they're impacting the market and what we're seeing. So the reptile theory is essentially a weaponized jury, a legal team pushing the responsibility and almost like an accountability on the juror's part to hold the business ABC, usually some, maybe a bigger name, and it can be smaller businesses too. But essentially that jury feels responsible to hold that large business accountable and award a very large claim situation. So, and that's where we see it, get into those $1 million limits and higher. So then from the jury's perspective, the business was negligible and, negligible to the point where, they're putting the public at risk. So not only is the plaintiff, that they're impacted, but potentially, you on the jury and the community at large can be impacted by the negligence of the company where they were seeking profits potentially over safety. And that can go back to, the slip and fall claims example with the hamstring. So that's the reptile theory, a weaponized jury. Almost acting like the hero for the community, where we see those large settlements. Third-party litigation funding is slightly different, but it's very impactful. This is capital that's being injected into a claim situation. It can be provided to the plaintiff or the legal team, personal injury attorneys. We see a lot of that happening now. And essentially what that does is it can prolong a case, drag out defense costs and legal costs. And the intention is that in a large settlement, the third party litigation or private equity receives a piece of that settlement. How does that impact us in insurance and our commercial insurance policies? Well, we've got, mass higher losses, right? Where they're piercing the umbrella. And that's driving up insurance premiums, reducing capacity, the limits that the carriers are able to provide. In the past, we could easily get $1 million, $2 million. Now, many carriers might not offer it at all. But what it also does is it upsets the assessment models for underwriting. Our underwriters, review our submissions and our loss history. And if there are claims, maybe an open claim, this upsets the predictability. With third-party litigation funding, how can the underwriter tell if those funds are available, if that's involved in this claim, or maybe not? So that's also going to impact scrutiny when it comes to underwriting and the ability for proposals and additional options in the marketplace. So again, we could probably go into this one for an entire webinar, but are there any questions about third-party litigation funding or the reptile theory from the group? Okay, Lynsee, Riley, did I capture everything?
So,
So I think the only thing to add to the third-party litigation funding is if you have locations in California, there are a lot of personal injury attorneys that are getting money from private equity right now, just due to how high the claims are being able to settle. And I know we use claims today. I was trying to use ones that are relevant in, in our geography, but what really had turned the needle on where claims are settling was a $1 billion verdict a few years ago in Florida for an auto fatality. So the trend is just increasing claims costs and more capital to go after companies and get insurance payouts.
The good news is there are calls for transparency. So, it's not all doom and gloom. The transparency means that if there is third-party litigation involved, that not only will the legal teams be made aware, but the insurers be made aware. This is vital. It's critical for us to control premiums, and also to control the impacts of social inflation due to these things. So yeah, I think we can move on to the next slide. If there are any questions about this, again, it's a really exciting topic. Please reach out to us and reach out to me. I enjoyed putting together some content about third-party litigation funding and the reptile theory. Move on to layering.
Next up, so previously we just kind of spoke about, okay, claims are increasing in terms of the dollar amount that they're getting settled for. Insurance premiums are going up when it comes to umbrellas, because they're more fearful of actually having to pay out a claim. But something else that is happening is umbrella carriers are also reducing the limits that they will put up, because it's becoming inevitable that they will be settling claims for larger dollar amounts. So we've seen a lot of carriers exit the umbrella space. And we've also seen a handful just lower the amount that they're willing to offer our insureds. So for example, let's say 5 or 6 years ago, you would go to Liberty Mutual and get your insurance policy, and then they would offer you a 10, 15, maybe even $20 million umbrella. So slowly this has been being carved back. We were seeing 15 million, and then 10 million umbrella limits had kind of become the industry standard for the last couple of years. Now we're either no umbrella or $5 million umbrella limit. But that doesn't mean we can't get you more limits, and that doesn't mean that your new requirement, depending on franchise agreements or leases, will only be $5 million. So what we've illustrated today is what it looks like building an umbrella tower, and this is extremely commonplace in the market. So this isn't a situation where you're going to have gaps in coverage due to having multiple insurers. So on the first example, we have we're building out a tower to get you to 15 million. So one thing that we can also use is you don't necessarily have to buy a $15 million umbrella. We can use your primary GL policy to count as the first million in that tower if you are trying to reach a requirement. And then let's say the primary is with Hanover. And then Hanover is going to also offer an umbrella. We can then get the 4 million excess of the 1 million with Hanover, and so now we're at 5, and then we can go to another carrier. I'm going to use Arch for an example, and we can go to Arch and talk to their excess umbrella market and get 10 million, and now you have 15 million in limits, 14 million of umbrella, but this would satisfy the $15 million liability requirement that you may have a landlord or franchisor requesting. The next scenario is also to show building that umbrella tower, but also ways to help control costs when building an umbrella tower. So I'm going to use a hotel management group as an example. You're a hotel manager, and let's say you have 10 locations, and 5 have similar exposure and another 5 have similar exposure. So they may not be able to be combined on one underlying policy, but we're going to find 2 insurance carriers. So my example is going to be, we're going to put 5 with Arch, and then we're going to put the other 5 with Cincinnati, and they're giving you the $1 million occurrence, $2 million aggregate. But you have franchise requirements, and they're requiring a $20 million limit. So instead of building 2 separate umbrella towers, we will work with umbrella carriers to build one umbrella tower that sits under both underlying insurance policies. So we have Arch in Cincinnati, and then we can go to Travelers and get the $9 million umbrella, and then we can go to Chubb, get another 10, and then we can go to Everest and get the remaining capacity needed to build out your structure, so you're not paying for double umbrella. you're meeting the limits. It's a little bit of cost savings. We get a lot of questions about umbrella layering because there can be concern like, why do we have to do this? Once again, it's very common, but this is another spot to pause. If anyone has questions about limits or umbrella capacity or structure questions.
Lynsee, as an owner, where would I find if I am required to have an umbrella or if I'm unsure if I should have one or not?
Yeah, so this is couple ways to answer this. So if you are part of a franchise, there's going to be a franchise requirement. Cassie, or your broker can review your franchise agreement and see what kind of liability limits you're required to carry. If you are leasing a location, they're going to require liability limits, possibly including different coverages within there. So you may have a liquor liability requirement. We can help review that. The next question is always, what limit should I buy? And this one can be kind of tricky. So a few things we can do. We can benchmark and tell you kind of what your peers are buying. I will tell you though, whenever we do benchmarking, the other benchmark that I run is how much people are paying per million with the umbrella limits that they're buying, because when you're getting them less expensive, you're typically buying more limits, but we can run some different benchmarking tools to help you develop a tower strategy. We can look at claim scenarios. It's kind of challenging right now because as we talked about, there's ones that are settling for $1 billion. I know there was two $15 million liquor losses in California recently. So it's, do you want to insure for the severity, or is that a concern of yours? And then next, it's at the end of the day, insurance is the transfer of risk. It's balance sheet protection. So we can also just run through scenarios. Okay, if you have a $4 million foodborne illness claim and you have $3 million in liability and you have to pay the other two out of pocket, are you going to be able to stay in business? Like, how much balance sheet protection do you need? How much risk transfer mechanism do you want to have in place? So that's something that we help guide our clients through, but there really is no way to say this is exactly the limit that you need to buy unless someone is directing you and saying, this is the requirement, you have to have it. So any follow-up questions to that, or did that answer the question?
I answered it, I think.
Okay.
Lynsee, what exactly does the umbrella cover? How does it work? What does it say?
Good question. So we get this a lot. So you have a property policy. When you buy your property policy, you buy it for the limit you need. So if you're insuring the building, you buy it for the building limit and your stuff. If you don't own the building, you buy it to insure your personal property that's in the building. The liability portion is going to go over your general liability and auto. So it's also not going to go over any executive lines, or not the employment practices or cyber liability. It's auto liability and general liability. And the easiest way to break down general liability is if you cause bodily injury or property damage to somebody else. So that very basic is liability. And so this is going to basically, when we're speaking hospitality, for the most part, it's going to protect you in the event that someone becomes injured due to one of the products, which would be considered food in this scenario, or alcohol, or they sustain injury just on your premise. Hi. If there's no other questions, we'll go to the next slide. Oh, okay. Here we go. So something else when we are looking at umbrella is the exclusions. So we talked about claims are big. People are going to charge more because they know they're going to hit the umbrella limit. They're going to offer less because, once again, insurance companies are ready now to pay out more umbrella or higher limit claims than they have previously. The next step is they're looking at the most common cause of claims and then claims that are becoming more popular, and they're excluding them from the umbrella. Some are also excluding them in your base policy. So it's very important to know what you're purchasing in your umbrella. Common new exclusions that we're seeing: human trafficking and sexual abuse and molestation. We have seen these for years, but now it's across the board. It's almost become challenging to get this coverage in your umbrella tower. there's more litigation around human trafficking. There's now more lawsuits coming out, like blanket lawsuits people are getting named in. So in conjunction with just being aware of this exposure, you definitely want to look and see if this is covered in your policy if you're a hotel or even a restaurant at that matter. Liquor liability. So I think this is the one that upsets our clients the most, is when they find out. They'll come to us and they will say, hey, look at our insurance, we're with X, Y, and Z. And we'll say, okay, how much liquor are you wanting? Like, how much liquor liability are you wanting to make sure is insured? They're like, well, 10 million. That's what my umbrella is. And then we take a look, and Cassie sees this a lot. We're like, well, if liquor liability limits up to 5 million, the additional 5 million on top of that actually does not include liquor. And so you definitely want to make sure that is covered in your umbrella policy. And then assault and battery and firearms and weapons. These are kind of two coverages or exclusions that piggyback on liquor. So maybe you don't have the liquor exclusion, but then you have these exclusions. You just want to be really cognizant of what coverage you're purchasing. We can almost always get you this coverage for the most part. And if we cannot get it within the umbrella, we can find you a standalone policy. It won't be the 10 million or 20 million limits, but we can still find this coverage for you on a standalone basis. Cassie, anything you want to add to this portion?
You picked it up. I guess what I would add is that we see, and we have seen in the past, especially for the larger hotel chains like Best Western, where sexual abuse and molestation or coverage for human trafficking had been required. And to the point of the whole webinar today, it's very difficult to secure that coverage. So we have seen some of the larger groups change their franchise requirements to meet the market where it is today. And a lot of the times that's because the franchisees are going to the franchisor and explaining, what they're seeing in the marketplace, that it's tough to secure this coverage. So it's not necessarily new, but it really is coming to a head, I would say, and that's what I would add. You have any questions about this slide? Okay. I think we can move on.
Next up is, we've talked about all the doom and gloom in the market. So how do you prep for it? What can you do to make sure that you're a desirable risk to underwriters? And I think this slide is not only, okay, how do you become a desirable risk to underwriters, but also what are the best risk management practices that you can have in place? So when we're going out to market and we're securing umbrellas, the underwriters are asking a lot of questions. They really want to understand what your risk management protocols are, your safety protocols. They really dig into your losses. And it's not just, okay, let's look at your loss run and see what losses you've had, but it's explain the loss, why did it settle where it did, and then what changes have you made to make sure that you don't have one of those losses moving forward. And I think being able to tell a story about your safety practices and your loss histories can be really impactful in the coverage that we're able to secure and also the premium that we're able to get. There will be supplemental applications. I know the insurance process just becomes more challenging year after year, and sometimes for us it feels day after day. I will say, when you are filling out the supplemental applications, you can also use it as a checklist. Like, okay, they're asking a lot of questions about different safety protocols and whether we have them in place. This may be some good ideas of things to implement, and we can also help you implement those. Your insurance carriers can help you implement different safety protocols, and we also have a risk control team that can assist with that. So if anyone needs assistance with making sure that they're doing everything they can to be their best risk, there are resources out there, and they want to help you and they want you to be safe. If you are serving alcohol, being able to not only say, like, we do tips training or we have very specific liquor training, but really get into the details of, we know that our staff is comfortable cutting people off, or we always have a manager on staff cutting people off. Like, being able to even go a step further than just saying we have liquor training is extremely helpful. And then talking about the training that you have in regards to human trafficking and sexual abuse and molestation is also really big. More so, I guess, for human trafficking, and there are the best practices that is a popular industry standard, but really being able to tell a story about that and how you want your establishment to be safe can be really helpful in being able to secure these coverages. And then Cassie, what would you like to add to this one?
I think the biggest thing for the underwriting considerations is that all of these things can truly be the difference maker in a tough market where there is narrow competition. Telling a story, filling out those supplemental applications, which by the way, our team helps you do that. There's in 2019, 2020, you didn't have to fill out an application. It was really quick. You could get basic information and you could get a quote. And that's just not happening anymore. These supplemental applications, our team will help you fill them out. We'll, in some cases, sit on the phone with you. We can get it done in a very quick manner, but telling the story to an underwriter so they really understand the risk and not just getting it submitted with just the basics, the application, the loss history, the things that you would normally be asked for. That's the difference of whether you have 3 quotes to look at or 2 quotes to look at or 1. The difference whether you're going to be with the carrier that you've been with for the last 15 years because they're the most competitive and no one else is writing new business. Taking time to dig into this can potentially save you money. It can improve your coverage, and it can make you more prepared to pivot in the tough marketplace. And partnering with the broker is so important to do that, and having those conversations are key. Starting the conversations early is also critical in this marketplace, especially if you do purchase an umbrella right now, or you're looking to purchase an umbrella, or perhaps your exposures are a little bit different. You have auto, you've got delivery, you're doing catering, you're a hotel, but you have a pool, you're on the coast, you're in a wildfire zone. Getting with our team and telling the story and the narrative and providing the loss history and providing the applications is the difference maker. That's what I would add. Oh, I will add one more thing too. Why not? Building and contract review with your broker is also critical. If you are looking to open a new location and you're going to sign a lease, sitting down or not even sitting down, sending a copy of the lease to your broker. Let the broker review the insurance section and advise at that point. Sometimes limits on leases are written, in 2015 or 2001, and they can be somewhat outdated. Oh, I'm moving ahead.
We have a question from the audience before you do.
Awesome.
That. Yes.
Yay.
How much time should I set aside for this process?
I would really, if you have let's say you're working with your broker right now and you're 90 days out from your renewal, start then. Set aside the time to ask for what applications may be needed for your renewal, if you have losses on your loss history report from your carrier within the past 5 years. If you're a larger exposure like hotel chain, maybe 10 years, tell a little story about each loss. What happened? What was done to avoid the loss in the future. But again, to answer the question, start as early as you can. If you're larger, 120 days. If you're smaller, 90 days. And then it all depends on the broker as to how much time you might take with that broker. I can say confidently with us, we're pretty quick. We know what we need. We know which markets we want to go to, and we know what they want. But if you're experiencing increases each year, like most of us are, starting as early as possible to have the conversation puts you in a better position in the marketplace so you can secure more competition. And you're not waiting up until that, that renewal date or the week before the renewal date. That's not always avoidable. Lots of brokers love to promise that, but in some cases in a tough market, that does happen. But if you've started early, chances are you won't feel like you're being held hostage on renewal day. You're going to have more options or a strategy as to how to work with the current coverage to make that more competitive in a non-competitive marketplace.
Cassie,
Okay,
it's
time.
Yeah.
Yeah, in terms of time, I would say you need to set a few hours aside. And then I would also say there might be different folks from your restaurant or hotel that you may want to also have participate in the application process. We can always set aside 30 minutes to an hour at the least to walk you through some of the applications. It's not extremely time consuming, but I would say a few hours.
Cassie, if I am put in the position where I got my renewal about a week prior to my effective date, what would you suggest doing?
If you get your renewal a week prior to your effective date, and you know that your broker has not sent your submission out to the broader market to secure competitive options, I would say the best thing to do at that point is to review the policy with the broker, review the coverage that you have in place, know what you're buying as part of the policy. Again, you know, this is about risk transfer, you know, and your balance sheet and protecting your balance sheet. So we have seen, you know, some of our owners and this is pretty rare, but some can self-insure if some have a serious loss and it makes coverage unaffordable. And that's a reality. You know, if you have a bad liquor loss and your liquor liability coverage costs you $25,000 annually after the loss and throughout the process of the criminal investigation, you have an open claim, the underwriter has to set a reserve. This is where that third-party litigation funding kind of ties back in, and there's unpredictability there. The underwriter no longer cannot corrective and accurately predict how much that claim may settle for. So again, if you're left with a week, it's pretty tough to get out there, but there are solutions. Coming to our team with a week left and you want to see if there is, you know, competition for you or if there is anything that we can do, we love that. We'll review the policy with you. We'll isolate any potential markets that could be competitive. And then what's the likelihood of being able to turn that around within a week time? We have transparent conversations about that. In some cases, we might recommend you stick with that carrier, renew that policy, and we'll continue the work to secure competitive quotes. There also may be a broker of record situation that can come up if you don't have the greatest relationship with your current broker, or you're not having these conversations with them. In cases where we have about 14 days before renewal and sometimes less, we can take over as the agent of record. If you're subject to a minimum earned premium, that means if you renew with that carrier, that you'll be paying at least 25% of the premium before you can cancel without penalty. But just having that conversation, Riley, I'd say come have a conversation with us, talk to us. We'll give all of the strategic points that we can deploy, and we'll get to work quickly. If we can't do something, we'll be honest with you about that too. Because sometimes that's not the best situation for our client or the operator, you know, within a week of time. So we can set a realistic time frame as to when we could expect a solution. Did I answer the question?
Hopefully I think, Riley, if you came to us with a week and you felt like your quote wasn't competitive and that there were markets that weren't approached, I would agree with Cassie. Find the coverage, because you don't want us doing trying to secure something in 7 days. It's not going to necessarily be the best result, and it's not probably going to be the best use of your time. But we would see if there's any minimum earned premiums or any penalties to cancel early, and we can still go out to the market and move coverage outside of the renewal date. So that's very common.
Yeah, it's worth having the conversation. If you're not sure and there's a week left, reach out and just have the conversation with us for sure.
We have another question from the audience. When quoting for renewal for coverage, should I pick one broker or work with a couple to get quotes? Are there any risks with either option?
I'll take that one. So
yep, that's a great one. I love that question.
I think that it can get really messy when you're working with multiple brokers in the marketplace, because we all go to the same markets for the most part. Some people have access to less markets or maybe different ones, but for the most part, I think the best way to approach an insurance partnership is to decide the broker that you want to represent you in the marketplace. Otherwise, what can happen is if Cassie's going out to markets and I'm going out to markets, she may get access to one that is more competitive, but she may not answer the questions correctly or negotiate the best coverage from that insurance carrier. So it's a more competitive quote, but it's really not most competitive coverage. Whereas then I'm left with something else that may be more expensive, but with better coverage. And then you are put in the position to play broker and try to figure out, okay, what are the coverage differences, the premium differences. So definitely work with one broker, but make sure that they are the broker that has the market access that is needed for your unique exposure, whether at restaurant, hotel, retail. And that you feel like they're taking the time to explain your uniqueness to the marketplace and the good protocols that you have. I think doing a broker evaluation can be a good way to decide, okay, who is the person that I want to work with moving forward? Who is going to be my insurance partner? Any other questions?
That looks like that was the last one for right
Okay.
now. So go ahead and move along.
Yeah, of course. Okay. So Cassie already touched on this. She was really excited about leases and contract considerations because it comes up a lot. But this can also be a major driving factor in coverage that is being placed, is what you're required to carry. So we work with our clients on reviewing the insurance language within the leases, the franchise agreements, any other agreements they might have in place that have insurance language in them. It is extremely important if you can to have someone review the lease, the insurance language in the lease before you sign it. I have been in situations where I have like a retail client who will agree to a lease that requires them to carry liquor and pollution coverage. It is very hard to later on explain why you don't need to carry that, because then you're working with someone who is basically a box checker and doesn't understand why you're not getting that coverage, and it can be extremely costly if it is not necessary for your business. So definitely make sure you're reviewing these contracts. There are going to be scenarios where there's liquor liability limits required. That is a huge one for restaurants. In addition to reviewing the leases and explaining what is required for you to carry, we can also, if you run into a situation where the limits being requested seem a little high for your exposure, we are definitely happy to talk with whoever's requiring that and explain, you know, the premiums that we're seeing in the marketplace for that coverage, or why it may not make sense for you to be required to carry the $10 or $15 million limit. Auto liability limits required. So this comes up a lot, is I don't have, you know, none of my employees are driving cars, but if you have an employee who is driving their personal car for business behalf, and this doesn't have to necessarily be food delivery, this can be running an errand, running to a store, running to a bank. If they're driving during work hours, you will need to carry something called hired non-owned auto liability. So this would also be in like the delivery auto space, but it can be for anyone driving a car for any work purposes. But sometimes they can, once again, ask for limits that may be cost prohibitive for you to be operating and be profitable. So we can have the conversation with, okay, they're gonna have one person at this Ben and Jerry's who's going to the bank twice a week. They don't need to carry a $10 million liability limit. Let's agree on a limit that makes sense for the operations. Franchise and brand requirements, Cassie touched on this a little bit. It is becoming a scenario, especially with some of the human trafficking exclusions we're seeing, where we're not able, or the market is not offering the limits depending on your operations that are being requested of you. And once again, we can show them what our marketing summary is, or how we've exhausted the markets, and just let the franchise know, like, this is now what is available in the marketplace. Because there are gonna be cost concerns, and then we're also running into financial rating situations. So there may be a scenario where you are with a insurance carrier who now has a different financial rating than they did a year ago. When this happens, for your underlying coverage, some of the umbrella carriers will not sit over that underlying policy anymore. Or you may have requirements within your lease to only partner with insurance companies that have certain financial ratings. And so one, explaining what is happening in the market, why the financial ratings are changing, and why certain carriers who may not have the specific financial rating that it requested is a non-issue. So a lot of different requirements that we can help negotiate, help you understand, and make sure that you're insured properly for. And I think also some tips, like just big overall takeaways from this. Don't assume that some of the requested coverage is in your umbrella. definitely look at the exclusions, or have us look at the exclusions, have your broker look at the exclusions. It's extremely important. Cassie touched on this. Don't wait until right before your renewal to start the renewal process. We have to get the underlying policy before we can start building the umbrella tower. And so it's one of those situations where we can go get property, auto, cyber, all these coverages at the same time. You cannot get the umbrella tower until the policy that sits below it is placed. So if we need to go out and secure 3 different carriers to build your tower, we're gonna need the GL, then Travelers, then Arch, then Everest. So definitely allow enough time to make sure that we can secure the most competitive options in the marketplace. And then also, once again, if you are in a franchise, there can be penalties if you're not meeting the requirements or if you have these exclusions. So you want to make sure that you understand what's going on with your insurance program. And we touched on this, but definitely review the lease with your insurance broker to make sure that you are in compliance with the lease, but that you're also not being requested to carry anything that is not necessary for your operations. Cassie, anything you want to add before we conclude our webinar on umbrella?
That was fantastic. Are there any questions? We love to hear them, so feel free. Okay,
Look like it.
Riley, any questions from your side?
No, I really appreciate you guys going through all of these tips and tricks just for what we're going to see in the market. So thank you, Lynsee and Cassie, for being here today.
Absolutely. We love the WHA and all the members. We hope everybody that joined the call has a very productive day. And if you need any support whatsoever, and you can benefit from anything that was shared on the webinar today, we definitely encourage you to reach out to us. And we thank you for joining.
Yeah, that brings us to our next question is how can our audience members get in touch with you guys if they have any more questions or would like to start a quote?
Absolutely. I would
So
say,
Riley, right?
Yes.
yeah, Riley, go ahead.
Oh.
I can put my contact info in the chat.
Perfect. Yep. Reach out to Riley and Logan. Their team knows exactly what we need to get started. We take a quick look at that. And then we'll be able to determine if there's anything additional that's needed, and we jump in to help and we get going and we rock and roll.
All right. Well, thank you all so very much. We really appreciate it. Once again, this will be up on our website later today, along with the slide deck, and you will also receive it in your inbox. Anybody who registered for this will get that today. And again, thanks so much.
Thank you, everyone. Have a great day.
You too. Bye-bye now.
Bye.